have I prepared? First, I want to take another look at the market with you, see what happened on the market last week and how cryptocurrencies have developed. Beyond that, we'll also talk about the market data since the interest rate decision is coming up, and there are a few new labor market data points that have come in as well. Then I want to briefly talk about that with you. Then, of course, we'll also look at the Fed tool to see how likely that is, how we might get an interest rate cut. There have also been quite a few developments there, but there are also some risks involved. I'd like to share my assessment on that. Then we'll also take a look at the Bitcoin and Ethereum ETFs and what inflows or outflows might be happening there. And then we'll get started. Yes, overall, I'd say that last week went well. If we take a look at the last 7 days here and scroll down, you can clearly see that pretty much everything is in the green. Let's take a look at the most important and largest coins. For example, we have Bitcoin, which gained a solid 4.5% over the past week. Ethereum is up 6.5%, also quite strong. XRP also gained 8%. Solana even saw a 17% increase. BNB, I believe, even hit a new all-time high with a 7% increase. Altcoin rose by 25%. IPE gained another 18%, and it's now almost among the top 10. We'll also briefly talk about that one today. Chainlink up 10%, SUI 7%, AVAX 16% increase, Hedera 11%. So yes, as you can see, Polkadot also gained 10%. You haven't heard much about it for a long time, but we'll briefly talk about it today as well. Yeah, that's what I would say. They're all developing well. Ondo as well, it gained 20%. So I would say that's a great development. Of course, it could definitely continue like this. Altcoin, for example, gained 80%. At the moment, I'm in a short position there because I assume it won't be able to hold that level and will be sold off significantly again. But alright, let's go through all of this together. Fear and greed, let's take a quick look at that. Looking at the index and how things have developed, we were just below 50% for a while, but now we're rising again and have reached 50%, so we're at neutral. Yes, I think there's still room to move up. But I actually think that's a pretty good thing, especially since the interest rate decision is coming up. Of course, it's good if we still have some room to move up here, because when greed really kicks in, then the numbers naturally rise even further. Then we also have the altcoin season index, which I'd like to take a look at here because we also discussed this in the Telegram group. Someone mentioned, hey, look, we're right at the very top in the altcoins, in the top range. Shouldn't we start selling soon? You just have to keep in mind that on the one hand, we have an overview here over the course of the month. And of course, in the past month, it's true that the altcoins have performed very well. But you should also look at the whole thing here in a 3-month rhythm, meaning the last 3 months. And there, it's already the case that at the moment, altcoins are performing better than Bitcoin. But if we look at the end of last year, there you could see a completely different spike. And now, with the altcoins, we're still quite a bit away from that. And even if I scroll further back and we go into the bull run here, from last year, that was the first top and then the second one. We're still missing quite a bit before we can really call it a true altcoin season. And in the third view, which would now be related to the year, we are still at 33 points. We're still very far from an altcoin season. And if we look at this as well, in the last bull run, we still have plenty of potential to rise. Muhammad, greetings to you. Nice to see you dropping by. In the last live stream, you mentioned that you'd like to have Solana and AVAX analyzed. I've prepared those 2 coins, and as I said, a few others as well. We'll take a look at them together today. Now let's take a look at the inflation rate, because it was on the 11th. That means basically yesterday the new numbers for August came out, and what we feared has happened. The inflation rate has now risen from 2.7 to 2.9%, but that was also to be expected to a certain extent. Because there's also the producer price index. That's the difference, I have to say. I already explained this in the last live stream, that the producer price index basically reflects the purchase prices that retailers or producers have to pay. And when the purchase prices for raw materials go up, and as we've seen, that already happened from June to July, that those purchase prices increased, it will of course eventually be noticeable to the end customer in the sales prices as well. You can also see this now in the inflation rate. Just as the producer prices rose in the previous month, we now also have a higher inflation rate here. The good news is that producer prices for August have already gone down a bit again, so this gives hope that the inflation rate won't continue to rise too much, because it's really a fine line. If the inflation rate increases, the Fed actually shouldn't lower interest rates, but rather if it rises sharply, might even have to raise rates further. On the other hand, there's the labor market, and that's the dilemma the Fed has been facing all along. Yes, if the labor market is doing well, then there's no need to lower interest rates, lower them. But if the labor market is doing poorly, and it looks like we might be sliding into a recession, then it's a case where interest rates should be lowered. However, if the inflation rate rises on the other hand, then it becomes difficult to decide which factor to prioritize. And you can also see from the changed figures that the forecast for interest rate cuts has changed somewhat compared to the previous week. But we'll take a look at that in a moment. Now let's look at the employment figures, the employment rate. And here you can see that the employment rate has remained stable. From July to August, it stayed at 59.6%. But overall, compared to last year, it has declined. Next, we have the initial jobless claims, and those have risen sharply since July. That means while in July we still had 217,000 initial claims, we are now already at 263,000 claims, reaching a yearly high, which is of course problematic for the US because it will be really bad for them if the economy is actually choked off by the high interest rates. Next, we have the job openings. There are no new figures for that yet. We can skip that. Those were the numbers. In July, there were 7,780 new jobs, but the one figure that has come out is the number of long-term unemployed. And here you can also see that the rate has risen sharply. In May, we still had, which was the low point, 0.85% long-term unemployed. And by now we are at 1.13%. That may not sound like much, but you still have to consider that given the population size in the US, it's actually a huge number. An increase of almost 0.5% of the population is an enormous amount entering the labor market. And that's why, according to the forecast, the key interest rates will be lowered. Now let's take a look at the Fed tool. I just updated it again earlier. Now the situation is that 92.7% believe that interest rates will be cut by 0.25 percentage points, which is of course good for us. And even 7.3%, which would have been unthinkable not long ago, expect that the key interest rates might even be cut by 0.5%. So this is extremely good for the market, definitely. But there's also a risk behind it. We'll get to that in a moment. Let's quickly take a look at the table from the Fed tool. And there, as I said, 92% expect that we'll get a key interest rate cut in September. Then at the end of October, 80% of people expect that the next key interest rate cut will happen. And then in December, as things stand now, the key interest rates should be cut again, and nearly 75% believe they will be lowered. So at the moment, it looks like we'll get 3 key interest rate cuts this year. And that's obviously extremely significant. Bullish for the market. I do see one risk though. We were already at 100% here. Where the key interest rates were supposed to be cut, we've ticked down a bit now, but what can you see? And for that, let's take a look at the Bitcoin chart. The Bitcoin chart has performed very well over the past few days since the beginning of the month. Yes, at the peak we had, now we've seen about a 7 to 8% increase. And of course, all the altcoins have also gone up. The risk I see is that this 0.25% interest rate cut is already priced in. And if it's already priced in, then of course there's the risk that as soon as the event is over, people will start taking profits. And at first we might not see another rally, but instead the price could initially drop. That doesn't have to happen, but the risk is there that the price could experience a stronger pullback again, which would also fit my theory. We'll take a look at that on the smaller time frame, where Bitcoin could be forming an ABC structure, and we might dip deeper into this trend reversal area before moving further up. Sorry, that's just my personal forecast. What I also see as dangerous in the market is a divergence. Here the price is rising, even though we had a pullback here. Overall, it's moving upward, showing an uptrend. But on both the MACD, which stands for Moving Average Convergence Divergence, and the RSI, or Relative Strength Index, we have a falling divergence. This means that while the price is going higher, both of these indicators are showing lower highs, which can sometimes signal that the upward momentum may be weakening. That means this is actually a trend reversal signal, which it will bring about. Does it have to happen right away? No, it doesn't have to, but the risk is there that we may have already seen our top, at least temporarily, soon. So I can only strongly recommend to everyone, despite all the euphoria we might have or will have with the interest rate cuts, that it's entirely possible for setbacks to occur that can't be predicted in advance, or rather that many people simply can't believe it right now. Alright, then let's take a more detailed and careful look at this on the smaller time frame. And here, in this particular situation, it's the case that I currently assume we've reached a local top up here for now, at least temporarily, based on the recent price action that we have observed. Now we're moving down into a wave A. Then we would move up into a wave B, which we've already just barely reached. So that means we're here. Let me make this a bit bigger. We've already come very close to this ideal area. And it's to be expected that there will be another rejection from there. And that will drop down again into the wave 4 in order to fully reach this box down there. Because as you can see here on the smaller time frame, it's actually the case that we haven't really reached that area yet, and a sell-off is definitely still possible. If the price is willing, maybe because we actually drop by 0.5 percentage points soon and it breaks through, then we would have a certain level of security if we manage to move up to the 1.6 Fibonacci level. That means we would reach a price that should be above $20,500. It would already get interesting at around $19,000, but we could be almost certain at $20,500. And after that, a wave 4 and a wave 5 would have to follow. And if we manage to build out 5 waves here, then we can be pretty sure that the bull run will continue and that we will definitely see new all-time highs. And if we look at the whole thing on a larger scale, those could be at around 130,000 US dollars and could maybe even extend up to around $150,000. It could go even higher, but those who have been following me for a while know that I'm not someone who throws out extreme moon prices just to get more clicks. Of course, if you're not yet a channel member, feel free to subscribe to the channel. I would really appreciate it. That way you won't miss any live streams or any videos I upload. And of course, you're also welcome to check out the video description where you'll find the link to my Telegram group and also these analyses that you see here. And even more detailed ones are available on Patreon, so feel free to check that out as well. Now let's take a look at 2 things. First, the quick liquidity for Bitcoin. I'll refresh it just to be sure. Once again. And up here we still have a bit left to scoop up at around 116,000 US dollars. And after that, once this area up here has been taken, I think it would fit quite well, especially with the upcoming interest rate decision, that we might see a bit more of an increase. Let's continue. We can also take another look at the BTC chart, and after that there's a lot of liquidity down here that can be picked up. I expect that we'll drop down again here. We're looking at a hotspot around 114,000 US dollars. And if I open the chart again, it looks like the price is still moving upward. As I mentioned here, we could go up to around 116,000 or 118,000 US dollars. in this wave be before there's another sell-off and we drop further to fish for liquidity. And after that, hopefully, the journey will continue. Even with a direct rise, if we were to reach around $120,000 here, there would also be a pullback that would bring us further down again. And that could also possibly mean fishing for liquidity. We just have to wait and see for now. In any case, both the liquidity and I find the analysis to be pretty much in line with the forecast of how things could continue. So let's take a look at the Bitcoin inflows. In the past few days, we've seen significant inflows again. On August 9th, 3,000 Bitcoins were added. Then on September 9th, it was a bit weaker with 205 Bitcoins. But on September 10th, it was over 6,500 Bitcoins. Yesterday, there were almost 5,000 Bitcoins that were bought up again. In total, we're already at over 600,000 Bitcoins that are held in ETFs. They just don't want to stop buying. And of course, that's still bullish for Bitcoin, but it also creates the risk that if there's ever a round of selling, you'll have a relative flood on the market as Bitcoins are offloaded. And at some point, that moment will actually come. Now let's take a look at ETH and see how things have developed there. It's similar with ETH. We've also seen gains again over the last 3 days. There was a strong sell-off on September 5th. On that day, 100,000 Ethereum was sold. After that, another 22,500, but interest is slowly returning. On September 9th, it was 10,000 Ethereum, and on September 10th, almost 40,000, and yesterday another 26,000 Ethereum were bought up. And you can see that the money is flowing back into the market. And of course, we all hope that it keeps flowing in for a long time. Of course, you never have a real guarantee.